Once again, following on from the 3,138 profitable trading strategies video, we analyse one of the other strategies to come out of this, which was the simple moving average strategy with the longer period of 420 and the shorter period of 75. Once again, from this screenshot, it is highlighted and we can see that over a 3-year period it returned over 25%. It was the third best performing strategy. The first strategy we looked at had a very short SMA and a very large long SMA. The second strategy had a moderately small short SMA and a large long SMA. Relative to these two, this has a larger short SMA while having a large long SMA. With the first Python based strategy we looked at, the long SMA was 305, the short SMA was 10, giving a ratio of long to short of 30.5. The second strategy we looked at had a long SMA of 370 and a short SMA of 110, giving a ratio of long to short of 3.4. This strategy has a long SMA of 420 and a short SMA of 75, giving the ratio 5.6. So relative to the other two strategies, the ratio of long to short SMA is intermediate in comparison to the other two strategies. As with the other strategies, we again see the real-time breakdown of how this performed over the last 3 years. The blue graph again shows the cumulative profit and how it varied over time. About half of the time, the strategy did not seem to generate immense profits. However, the latter half of the graph shows that it did end up being quite consistently profitable. This series of screenshots again shows how the strategy performed over time, and as is the case with any well-performing strategy, gradual transitions from red to amber to green show the relative stability of this method. This screenshot, again generated by the matplotlib library in Python, shows all trade entries and exits from 2020 to 2023. Again, by counting the green triangles, we can see that 6 trades were executed in this time, due to the smaller SMA being relatively large compared to the other strategy, which had the short SMA of 10. This SMA being 75 ensured that in periods of low directionality, less chop was seen and less trades were executed within any given time frame and subsequently terminated, which can lead to drawdowns in account sizes. But using such an SMA strategy, these drawdowns should be relatively small, or very small values of short SMAs. By looking at the left hand of the graph, the period up till September 2021, we can see why the strategy did not yield huge profits in the first half. If we look at the price corresponding to the green triangles relative to their corresponding inverted red triangles, we can see that for most of the trades, the pair of green and red triangles were at similar price levels. So even though trades were open for long periods of time, when the trades were terminated, the overall price had mostly returned to the level that the trades were opened at. Whereas the right side of the graph, once again, that shows large directionality. We can see that trades were opened and then kept open for a long period of time, and the price had subsequently moved significantly during this time before the trades were closed, therefore locking in significant profits. Please like and subscribe. Let me know if anything is not clear in these videos, or if you think if anything's amiss. Also, please comment on any strategies that you would like tested.